just get in a check on how the FIIs are viewing India. To discuss the market rally and talk about the global cues, we're now joined by Christopher Palmer of Benson Avenue Capital. Hi, Christopher, and thanks so much for joining us on CNBC TV 18. Well, the early part of the rally in India was attributed to a catch-up trade, considering that the Indian markets had underperformed on account of demonetization and other issues. Do you think that is still taking place, or are we pretty much caught up with the rest of the emerging markets and global markets? And what explains this outperformance that we've started to see of the Indian markets?
Well, I think that what's going on globally is that some of the higher growth numbers that we investors had originally thought were going to come through from the U.S. Are beginning to wane in their expectations, and Chinese growth has come down. So although some of your guests have been talking about the pathway for Indian growth still looks pretty good relative to what else is going on out there. Technically, the Indian markets come back very strongly from its dip late last year, bottoming in December, and technically looks like it can continue to move.
Christopher, with the market being at its record high, how much more do you think you'd want to give this rally here in India?
Well, I think the rally in India, with all respect to the Indian fundamentals, is a lot of it's going to be paced by what we see going on in developed markets. I think that with the U.S. Still enjoying some expansion, there were sizable upgrades to the U.S. market's outlook yesterday in the market, and Europe coming back with some decent industrial numbers and also better outlook for the banks. I mean, I think the global outlook for equity markets is actually pretty good, and India has always been a market which, when the global outlook is good, you can get some good synchronized moves from the Indian stock market. Certainly one issue which we're putting behind us, or we're getting closer to resolution in India, has been overarching concerns about the banking sector. And that does look as if we are beginning to get, at least at the beginning, if not closer to the middle of that story. And that is probably one of the really marks against India moving higher. But as that begins to move to the forefront, I think that could take one big stumbling block out of the way of the Indian market.
Christopher, we're also looking ahead to the earnings season out here in India. Do you think that can derail the up move?
I think, well, like all of these markets now, I think one of the reasons that the U.S. market has paused, and I think that market participants have learned to be cautious, is typically the markets get very cautious before earnings season, digest the numbers, and unless something really dramatically awful happens, there's plenty of, with this kind of synchronized global economic expansion that's going on right now, there'll be more good than bad in those numbers, and participants will find a reason to take the market higher. Like I said, I think as long as the banks come through with numbers that show that there's a plausible case for them, some of their concerns being addressed, particularly in the state-owned banks in India, I think market participants will find a reason to move the market higher. Not in all sectors, but I think that for capital goods companies and consumer-oriented companies, I think there's a very strong case for India continuing to move forward.
All right, Christopher, we'll leave it on that note. Thanks so much for joining in with your thoughts on the big rally that we're seeing here.